Assalamualaikum warahmatullahi wabarakatuh. We are group 3, which is our group name is a dynamic. Today we will present our case study that we choose Leasess in Mfrs 16. First of all, my name is Marsha Mahira binti Muhammad Amin. My matrix number is F1067. Today I would like to present about the definitions and also the objective in Mfrs 16. First is the lessee. Definition of lessee is an entity that obtains the right to use an underlying asset for a period of time in exchange for the considerations. Next is the lessor. Lessor is the entity that provides the right to use an underlying asset for a period of time in exchange for consideration. Next is the objective in Mfrs 16. First, the standard to explain how to record, measure, show and report the lease agreement. So the goal is to make sure both lessee and lessor, which is the lessee is the renter and the lessor is owner, to share clear and accurate information. This will help user of financial statement to understand how lessee affect a company finance performance and their cash flow. The second one is when using this standard, the company should look at the terms of the contract and all important details. So the company must apply the rules the same way for similar type of contract and situations. That's all.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Aminah Tasha binti Muhammad and my metric number is F1071. I will explain about recognition and measurement. For the lessee, at the start of the lease, two things must be recorded. First, a right of use asset, and second, a lease liability. The lease liability is calculated based on the present value of future lease payment. The right of use asset includes the lease liability, any initial direct cost, and any cost to restore the asset. After that, the lessee must depreciate the right of use asset over the lease term and record interest on the lease liability every year. Next is for the lessor. Leases are classified into two, which is finance lease, where the risks and rewards of ownership are transferred, and for operating lease, where the risk and reward remain with the lessor. There are also exemptions for lessees if the lease is short-term, meaning less than 12 months, or the asset is low value such as a laptop. The lessee can choose not to apply Mfrs 16. In that case, lease payment are recorded as an expense only.
Hi, my name is Nik Shakira binti Syari and my metric number is F1047. So next I will be present about the presentation and disclosure. For presentation, I will discuss about the paragraph 47 to 15 in Mfrs 16. So first is statement of financial position, which is in paragraph 47, which is the main rule is the lease must present the right of use asset and this liability separately from other asset and liability. If it's not separate, that means right of use asset must be included in the same line item as own asset of a similar nature. For example, right of use asset for machinery would go under property, plant and machinery. So it must disclose in the notes where the right of use asset and liabilities are presented. Next is investment property exception, which is in paragraph 48. If the right of use asset meets the definition of investment property, such as property held to earn rental income, so the lease apply Mfrs 140, which is investment property. For example, retail company lease a building and subleases it. So if the purpose is to earn the rent, it's an investment property and must be reported in Mfrs 140. So next is statement of profit or loss, which is in paragraph 49. It must be separately present which is it includes the interest expense on lease liability and depreciation of right of use asset. So the separation of these two shows that the depreciation use of the asset and the interest show the financing cost. And lastly is the statement of cash flow, which is in paragraph 15, the principal lease payment which classify under the financing activities, and the interest payment can clarify under operating or financing. It is based on the accounting policy under Mfrs 107, and other payments also can include which is short-term lease payment and low-value asset lease payment.
Assalamualaikum. My name is Nasha Shazwani binti Muhammad Saim, and my metric number F1055. I will explain to you about disclosure. First of all, objective in para 51. The purpose is to help people who read the financial statement, like investors or bank, to clearly see how leases affect the company's asset and debt in financial position, how leases affect profit or loss in a performance, and how leases affect the company's cash movement in the cash flows. In short, it shows the real impact of leasing on the company monies, property, result, so the user can make a better decision. Okay, next we move on to disclosure, para 52 until 54. First, interest expenses. This is the extra money, interest, the company pays on lease liability, like paying interest on a loan for leasing an asset. Second, gains and losses from the lease back. If the company sells an asset and then leases back, it may make a profit, gain or loss from the sale. Third, variable lease payment. Some lease payment change, like paying more rent if sales go up. This changing amount are called variable lease payment. Fourth, subleases income, if any. If the company rent out subleases, the leases asset to another party, it's earn the income from that. 5. Expenses on the short term and low value leases. Short term is a leases less than 12 months, and low value, cheap asset, for example, small office printer. And the cost of renting this is shown as expenses directly. The cost of renting, and this is shown as expenses directly. 6. Total lease cash outflow. The total money paid for all leases in a year, additional to right of use ROU asset. When the company sign new leases, the value of new asset they are allowed to use ROU asset is added to the balance sheet. 8. Depreciation by asset class. Depreciation means reducing the asset value over time. By asset class mean showing separately, for example, building, vehicle, equipment, and each type is shown. Okay, next we go to additional disclosure for para 55 until 58. First, amount committed to short-term leases. If the company agrees, commits to short-term leases under 12 months but has not paid yet, they must show how much they promised to pay. Second, if this is investment property, apply Mfrs 140. If the lease asset is investment property, like a building rent out to earn rental income, the company must follow Mfrs 140 rules, not normal lease rules. Third, maturity analysis. Per Mfrs 7, the company must show when they have to pay their lease liability, like next year or after 5 years. This helps users see the company future payment obligation. Lastly, if revalue under Mfrs 116, follow its disclosure rules. If the company Mfrs 118 update the value of lease asset, example land and building, they must follow special rules to disclosure the revaluation property. Next, qualitative information about leasing activities, para 59 until 60. First, nature of leases and types. What thing the company is renting, like office, truck, machine, and why they are renting it. Second, exposure to variable payment, extension, and guarantees. Is the rent changing? Can the lease be made longer? Did the company promise guarantee anything? And must explain it. Third, covenant and restriction. Any special rules in the leases, like you must use the building only for offices, you must keep good financial results. And fourth,
sale and lease back details. If the company sold something and rent it back, they must explain what happened, if they made a profit or loss. And lastly, short-term and low-value assumption. If they are using the rule that says small or short leases don't need to go on the balance sheet, they must clearly say it.